Imagine a stack of $100 bill to tall it reaches the moon and then comes back. Now imagine few companies that manage their amount of money every single day. We are talking about trillions of dollars. In the world of finance, size is measured by 1 metric AUM or assets under management. But who are these titans of wealth? What is their actual purpose beyond making money, and how do they manage such astronomical sums without breaking the global economy? Today we were breaking down the world of AUM, the largest firms on the planet, and the future of global money. Section 1. What is AUM? Why does it exist? First, let's get our definitions straight. Assets under management is the total market value of all financial assets that a company or individual manages on the behalf of their clients. The purpose: why do we need these firms? Most people and even some governments don't have the time, technology or expertise to invest trillions of dollars across the globe. Asset managers provide diversification, spreading risk, professional expertise and liquidity, the ability to buy and sell easily. The revenue model: they don't own the money, they manage it. In return, they charge an expense ratio, a small percentage like 0.1% or 0.5% of the total AUM. When you manage 10 trillion, even 0.05%, when you manage 10 trillion, even 0.05% is massive amount of the revenue. Section 2. Big 3 asset managers. If global finance was a movie, these 3 would be main characters. As of 2026, they dominate the landscape. Now, I am telling the firm and their asset under management and primary purpose and their style. BlackRock, 12.5 to 13.5 trillion dollar. The risk manager, famous for its Aladdin software, which acts as the central nervous system of global finance, tracking risk for thousands of institutions. This is the purpose. Vanguard, 10 to 11 trillion US dollar. The low-cost champion, owned by its own funds and thus its investors. It focused on index funds, simply tracking the market rather than trying to beat it. It is the purpose. State Street, 4.5 to 5.5 trillion. The ETF pioneer, they launched the first ever US ETF and focused heavily on institutional custodial services. How they manage this? They use passive investing. Instead of picking individual stocks, they create funds that automatically buy everything in S&P 500. It's efficient and it has made them the largest shareholders in almost every major company. You know, from Apple to Amazon. Section 3. Sovereign wealth funds, the kings of nations. But asset managers aren't only ones with high AUM. Meet the sovereign wealth funds. This is the state-owned money usually built from oil profits or trade surpluses. The Norway Government Pension Fund Global 2 trillion built from North Sea oil. Its purpose to ensure that when the oil runs out, the people of Norway are still wealthy. China Investment Corporation 1.3 trillion US dollar manages China's massive foreign exchange reserves to diversify the nation's wealth. Abu Dhabi Investment Authority 1.1 trillion US dollar, one of the oldest and most sophisticated investing Middle Eastern oil wealth globally. Public Investment Fund Saudi Arabia 900 billion US dollar. The driving force behind Vision 2030. They are the ones buying football clubs, launching live golf and building futuristic cities like Neom, Riyadh as well. In the future, Riyadh Expo 2030. Their purpose isn't just profit, it's generational wealth and national strategy. Section 4. How is the money actually managed? Managing trillions isn't managing a personal bank account. It requires 3 specific pillars. Pillar 1, technology and AI. Firms like BlackRock use AI to scan millions of data points every second to detect risk. If a war breaks out or a supply chain snaps, their computers react with before a human even finishes their coffee. Pillar 2, rebalancing. As stock prices change, the portfolio becomes lopsided. Managers must constantly sell winners and buy losers to stay at their target allocation. Pillar 3, corporate governance. Because these firms own 5 to 10% every major company, they have huge voting power. They decide who sits in the boards of directors and influence environmental and social policies, often called ESG. Conclusion: the future of AUM. The future of AUM moving toward direct indexing, where your portfolio is personalized specifically for you by an algorithm, and tokenization, where even small investors can own fraction of a 100 million building or private equity fund. AUM is more than just a number. It is a measure of trust and power. The firms that manage these trillions are the invisible architects of world we live in. According to company market cap website, on February 27, before the war, the total company market cap website valuation amount $143 trillion, but now it has fallen around $1.5 trillion, almost 18 trillion collapse in just 35 days. Of course, it has common. Every war has every issues and market collapse is common, but it's not just for one reason. In this war, we have seen energy sites are targeting, we have seen crude oil infrastructures, and we have seen water distillation centers also hitting. It's the big issue, and this is, if war is continue another month, we will see of collapsing on Strait of Hormuz close, and if Red Sea goes by Yemen also, it will be a big trouble, and the crude oil price will be now $115. It will hit immediately $135 to $150. If war stops also, there is a real issue is seeing now here. Not about the Iran-Israel war, not about the America-Israel war. It's about the real issue is US bond yield. Yes, US bond yield has about passed on 10-year bond yield now 4.3 and 4.4. It is a red trigger. Generally we see in 2007 crash, in 1973 crash. Yes, 1973 crash is about only the oil situation. US can print easily and sustain. In 2007 financial crash, BlackRock saved, but again irrelevant printing of power by US, it's sustained. But now the situation is different. Why? Because one side is oil hitting and another side is bond yield hitting. Both case US can print money, but US can't print oil. US can't print water by distillations issue. It's the reason. Another beautiful bill is US passed on 41.1 trillion. Now it is already crossed 39.1 trillion. Now we are in the depth of US 39.1 trillion. If it is hit 41.1 trillion, even the war continues, whole world going blackout and the permanent financial blackout. So even now printing is not possible because about the world food prices is already hiking, and another reason is 30-year bond yield. It is hitting 4.93 already. If it is crosses 5, and if even US can use its printing power, it goes 6 easily and companies can't give the debt monies. So hyperinflation causes for the whole world. So think now, don't use algorithm or AI, just find me. We have just 30 to 60 days left to sustain the whole system. Money matrix leaders. In the last video, we already told great valuation reset needed. Yes, for the light change in the logic. If we don't apply, we lose already trillions of dollars. And energy side, if we lose, we can't survive. I hope find me for solution. We need unity to solve. Not one family or one AUM can't fix it. Hope you understand. Here is an interesting quote of finance world. Capital exists in service to life at all times. To acquire an asset at greater cost than value is simply unwise. When it comes to our assets under management, preventing loss is critical. That's all today. I have a Venus version also covers world fashion. Which would you trust more with your money? A human manager trying to beat the market or a low-cost Vanguard algorithm? Let me know in the comments. Don't forget to like, subscribe and share my channel. See you next time.